This week, I'm going to start with pending home sales. And home sales are such a big component of the economy because, if you think about it, when a home is sold, new furniture is purchased, maybe washer and dryer, maybe new refrigerator. I mean, home sales in general really are important for economic growth. And, I think this is one of the reasons why the government tries to intervene, although I think they should stay out of it. Um, because it drives so many other things within the economy, but you don't want to do it artificially. And that's what I think happens when the government starts to enter in programs to increase home ownership type of thing and lacks the standards for um, interest rate or the interest mortgage. And it's just something that they should stay out of and let the economy kind of take care of itself. But it's such an important measure. And this past week, it dropped to a record level. And let me just bring this up here. Pending home sales dropped the largest on record, 37.79%. And you can see pending home sales, when we look year over year, continues to just decline. This is not good for the economy. Eventually, this will catch up with labor and a number of other things, but it's starting to fall apart. And some of the reports now are, especially not just some of the large metropolitan areas in the U.S., but even some of the smaller markets are now seeing price declines in homes. So that's what we're faced with. Higher interest rates, mortgage rates, are playing into that. They've come down a little bit, but they need to come down quite a bit more. So let's look at some of the other measures from last week. And really, the jobless claims came out a little bit hotter than expected. That's not surprising. It's actually the 212 we had a couple of weeks ago was actually very surprising. The expectation is this number will continue to increase over time. And then the Chicago PMI came out actually stronger than was expected. You know, it was 37.2 the previous month, and now it's 44.9. I guess that's good news, but this is also a time where people are buying products, and we'll see how if this continues into 2023. Let's take a look at what we got coming up for next week. Let's see. Next week we have. There's not a ton going on, but the things that will probably be market movers. Keep an eye on this 30-year mortgage rate. Not necessarily that it's a market mover, unless it drastically moves, but it's been kind of on a decline for a little while. And then we look at the ISM. Whoops, looking at the wrong week. No wonder nothing was matching up on my notes. Okay, the ISM PMI, obviously the 30-year mortgage rate on Wednesday comes out that I just talked about. ISM manufacturing PMI expected to stay about where it is at 49. If that moves a lot, that could have some impact on the markets on Wednesday. And then also on Wednesday, the JOLTS jobs opening report comes out. That could potentially be a market mover. Obviously, the FOMC, the Fed's meeting minutes is always a potential market mover. And then the other things that I really see that obviously would move markets would be non-farm payrolls. Came in hotter than expected the previous a month, and we're expecting this thing to go down. But remember, it's a lagging measure, and the Fed is focused on lagging measures. So, what are you going to do? The non-farm or non-manufacturing PMI also comes out on Friday. Doesn't typically move the markets that much, but it's one of those that could be looking for, potential if it's really out of whack from what the forecast is. But then you have all of these Fed folks that are going to be speaking on Friday afternoon. You got Bullard speaking on Thursday from the Fed. I mean, there's just any of these things potentially could. I don't think Bostic speaking on Thursday. I think the big one obviously would be the minutes that they have, and they're all going to come out and say we're going to kill the economy. Yay! So that's what you can kind of expect, for next week. And then investor sentiment, it went all the way up to the bearishness. It went to 52.3, which was getting back up there in the height. Anything in the 50s, even in the 40s for that matter, is pretty high. And it actually went down a little bit, went to 47.6% last week. And that's again on Wednesday night when that comes out. And then the fear and greed index ended the week basically in fear. A month ago we were in greed, now we're in fear, and it's all just going to depend on what happens in the market. I think this week will probably be a key week. This is still a continuation, supposedly, of the Santa rally, and we didn't see that actually until the last couple days. We had lots of panic there with Tesla over the last couple weeks, and then you have Apple that has shown a lot of weakness. So let's take a look at some of the averages and some of the things going on. I mean, the SPY is a big one. Apple obviously is a component in a lot of these indices. And, the SPY for, the day wound up down, but it was way down for a while. I was waiting for, things to start falling apart. They didn't. And, it held up fairly well. We've got a lot of gaps in here to fill above and SPY. So, it's an important week. If this thing starts to collapse, I'd say even the first 2 days, which I'm not expecting it to, had a strong rally at the end of the day on Friday. My expectation is that would continue. When I mean strong, there was a lot of volume coming in on a Friday at the end of the day. Let's see if I can get to the hourly here. Well, even let's go smaller than that. Last hour, you can kind of see the volume coming in here. So on SPY, and it made a huge run really in the last hour. Look at that, went from 378, topped out here around 382 ish, 382 and some change. And so that's a pretty good move in an hour on the SPY. So it's got some momentum going into Tuesday when the market reopens. And so my expectation is that will continue. We'll see. If it doesn't, then we're going to see most likely some ugliness for maybe even the first couple of weeks. But it has some momentum. We'll see how it plays. And be keeping an eye on it. The 10-year has gone up. It went up to 3.9%. It gets over 4. I think things start to get really ugly again in the markets. And right now, it's got a ceiling here at like 3.9%. And I'd like to see this sucker go back down. There's not a lot of volume in these, as you may have seen before, but we've got a floor here around 3.41%, ceiling at 3.9%. We look at quickly at the DXY. The DXY again hit a floor here around 103.42. It's starting to, it's still on a decline. here as it goes lower, but there's also kind of a ceiling here at 105 that hopefully doesn't break, but it could very well break. And I would say if that breaks above 105 and we get the 10-year running up above 4, you're going to see the markets collapse. And we're coming kind of to a moment of truth here. When we look at the volatility index, anything above 24, we've got really a lot of volatility, and that usually means the markets are going down, but doesn't have to. But you almost see this almost wedge looking pattern here on the VIX that's coming to, it's going to have to get resolved here. And somewhere here it could break up, it could break down. It's not really giving us a lot of clues. Look at that day, all the way up to one part, all the way down. It's always easy to do these things, looking back when you're looking at technical analysis. That's why I don't have 100% faith in it. But I think it is coming to a day of reckoning here for the VIX, and plays out with the 10-year, the dollar. If those break the wrong way, then obviously I think the VIX will go up, and we'll see some collapses in some of the indices. And what else do we have? Let's just take a quick look at crude. Had been in a downtrend, kind of broke that, and we don't really have a higher high yet, but we do have a trend going here that crude is going back up. Now, could it go all the way back up to 100? Could be. My expectation is that this thing will start to roll over somewhere into the 70s or maybe even below in the first part of the year, as economic conditions continue to get just throttled by the actions of the Fed and our spending and everything else. But we've got it's on an increase. Look for it to break this, develop a higher high here if crude is going to go up. This was an interesting thing. I'll just make note of this real quick, is the put call ratio. I mean, look at this. It was all the way up at 1.682 on the 28th. So, just last week. And then as the market went up the last couple of days, you can see that it went down. And then we kind of had a weak day on Friday as it started out, except for that last hour. And so the put started coming back in. So that's everybody's expectation, is that the market's going to go down, because a put means that you think the market is going down. Anything over roughly 0.7 indicate that people are, but this number here, that's, you'd have to go back a long time. Here we go. When was this? This was July of last year when it went that high. And then before, you're looking at the decline in March of the put call ratios being that out of whack. So we'll see. I mean, some of these things can, when you get it this high, it also could, get to a short squeeze on, because the puts, if the market does start to run up like my expectation, it could squeeze up even more. But we'll see how those play out. All right, for this year, I'm trying to put together something for people that have, maybe they're investors. They're not traders, but they're investors. And it goes off of my thesis that if the market declines one way or another, in other words, whether we get this melt up David Hunter talks about, or it just goes down over the next 3 to 6 months, that this decline will be at a point that it's going to take years to recover from. I don't, maybe we've already hit some people are already saying that we've hit the highs that we won't see for at least a decade or more. And if that's true, investing becomes much harder. And I, again, believe that investors should at least understand the tools of a trader so that they can make more and better informed decisions about the stocks that they're getting into. And so I want to put together a paper or something that kind of takes people through. I've got free resources out there for, the fundamentals of options. It doesn't get into the strategy, just so you understand what the tools are there from other channels that I've listened to, as well as some of the technical analysis. I've got a link that these are free resources that I think would help people if you're an investor. And trading is something that has a whole different set of tools that the retail investor doesn't get itself involved with. Now, most likely, depending on who you're invested with, they are, because they're making money off of, while you're waiting for Apple stock to go up, they're trading it and making more profit off of it, typically. And I think it's just knowing when to get in and out of a stock. If we look at Tesla, some people held through Tesla from here at 311. I mean, it didn't take long. It went from, on September 21st, it was over $300. Now it's 123. So it's gone down 50%. There's opportunities in there if you understand the tools, having some indications that something's happening by the volumes here and those types of things. So I think it's just kind of getting some basic knowledge in investors' hands so that they can at least say, oh, this is something I want to get into, or nope. But regardless, it's going to tell you, have you ask better questions of your financial advisor if you have one, because they're going to talk to you about, when you're getting into trade, they'll say, this is a good stock. And you'll go, yep, because I did the same thing for years. And, but it may have been the wrong time to buy. So these are things that you can get knowledge on, and it's real basic from my standpoint that everyone should have, this trading knowledge, whether you participate in it yourself or not, but having knowledge to ask better questions of your financial advisor, or, on when they're getting in, what's their plan to get out of a particular stock, because those are things people just don't talk about, and they need to talk about them. I mean, you don't want to be up here at 300 and having Tesla because that was the hot stock that you were sold, and to be down here and they'll say, oh, it'll always recover, always get back up to here. It may never get back up to there, into the 300s. It might, but, I don't think you can always go off of previous, axioms that people have said for years. Oh, the market always goes up. Don't worry. Just hang on to your stock. It'll go back up. It may not. And that, that's a danger. And you've got to be better at picking the stocks as well as trading them. And whether you do it or somebody else does it, you need to have a plan for each trade that you have. That's an opinion, but it's a pretty strong opinion. So that is what I wanted to cover this week. And remember, there is always a better way.